Hello everyone, welcome back to Infinity Wealth. Dr. Marttand Patel here. So I hope you've all had a great week. This week's video, what I wanted to talk about is really the property market. So what is going on? I wanted to give you my opinion going forward, what I perceive as some headwinds for the property market, what will be happening, and also what opportunities, more importantly, are going to be thrown up by all this, which is the most important. So to begin with, what I want to cover is 10 factors which I think will affect the property market, right? The first and foremost, we already discussed last week that because of the lowering of the stamp duty and the pent-up demand, property prices seem to have risen around the country. Now, I don't see that's being stable. I anticipate that after Christmas and into the new year, I think property prices will come down. It's as simple as that. Why do I think that? Okay, so if I give you the headwinds first, now everything that I give you, I don't want it to be negative, right? I am going to talk about all the positive sides of it, but here at Infinity Wealth, we're not about putting courses down your throats. What we're here about is to provide you real information where you can utilize it, and you've got an expert at the background advising you on what potentially could be happening in the pitfalls in the property market. So first and foremost, if we look at the furlough scheme is coming to an end. Now, with the furlough scheme coming to an end, there'll be there'll be people who are now forced to maybe sell their properties because they can't meet their mortgage payments, unfortunately. Or landlords will also be having trouble maybe with potential tenants who can't afford to pay their rents. So that's the first and foremost. Section 24 has been around for quite a length of time now, but the full headwinds of Section 24 are going to be felt this year in this year's tax returns. So I anticipate more landlords actually looking around, especially the older landlords, saying, well, actually now it's time for me to sell, and especially with the stamp duty being so low, I'm going to get more interest. Okay, so that's the first and foremost. If you look at employment, now I see, because of the furlough scheme, unemployment has been quite low. It's ticked up a little bit, but not as much as we all thought it would. But now furlough scheme is being removed, so I anticipate unemployment being raised up as well, which obviously will have a detrimental effect to property prices. We've talked about Section 24. The other thing that's quite important is the tighter lending regulations. I don't know if anyone has tried to get a mortgage recently, but the lenders have actually tightened up their belts, which means that developers, you've got to be mindful there as well. But by making tighter regulations, I don't know if you go back to the financial crisis where lending criteria was really, really beginning to get tighter. What did it do to the property market? It shrank it. It reduced the property market, right? The prices. So if lending criteria and lending is going to get tighter because the banks are more concerned about the overall health of the economy, and that consequently they don't want to lend as much, this will have a knock-on effect on property prices and obviously GDP of the UK as well. Hopefully the government is trying to mitigate all that by pumping as much money into the system. So if you look at also, if you look at London, now, there is a saying, as London goes, so will the rest of the country. Now, London has always been, especially in property, has been the leading sector or area that most people look at to see what London's doing. And as property prices rise in London, they tend to filter out into the rest of the country. Obviously, that has taken a slight back step, mainly because of Section 24. People from London or investors from London moving further up north, where the yields are a lot higher. So they're also forcing up some of the prices up north. Now, with London as an example, I am not the only one. Okay, if you go into London, London has become a little bit of a ghost town. Very sad. I'm a Londoner. It's very, very sad to see. I would like to see people going back into the offices. But if you look, I've got friends who work in finance, and most of them, their employers have all told them that they are going to stay at home until at least Easter. Some of them are saying now. They were saying January before, but now they brought it on to Easter, so they keep pushing it back. Now, if that is the case, poor old London, think of all that service industry in London that relies on the workforce within central London and the employment that creates. So obviously that's going to have a detrimental effect on office space. A lot of companies are now looking around saying, well, actually, do I actually need an office space that big? Because most of my staff are working from home, and we're doing okay working from home. We've got the business still ticking over. So banks, insurance brokers, they're all working from home. Unfortunately, the service sector is the one that's taking a biggest hit. Now, the other thing to realise is Brexit. On top of all this, right, is Brexit. No one knows what's going to happen. Now, in London, a lot of the firms are saying that they are moving offices or going to be moving offices to Frankfurt and Paris. And a lot of the larger firms are already starting to do that. Now, London as a financial hub has always provided auxiliary work for other units. Law, for example, the law firms in central London have always supplied, the financial sector as well, because they need them. So every service is interlinked. So Brexit will, who knows what that's going to cause, but it's better to be safe than sorry and anticipate perhaps this could happen and be mindful of that and making your investment decisions on current information that you've got. So that also has been going on. So these are potential headwinds that are going to affect the property market, which is why I have said in my forecast is in the long run, I'm very positive about property. No question about it. But in the short run, in the next 6 months, 8 months, 9 months, I think property prices will begin to come back down again. And maybe there could be a 10% correction there, which is not a bad thing at all, a 10% correction. I don't anticipate a crash. Main reason why I don't anticipate a crash is because if you look around the whole of the UK, we are not building enough houses. So there's a foot there and support there. But at the same time, property prices are based on people's income, what the GDP, and how the country is faring overall. And obviously, because we're going in a recession, that's going to have a detrimental effect on property prices. So with that in mind, I am not the only one. If you think about commercial property, I've got lots and lots of friends who've got commercial properties in central London, lots in Tottenham Court Road, and they're all, at the moment, they're all pulling their hairs out at the moment. And the main reason why is because they've got empty offices. Yes, a lot of the companies are still paying them. Don't get me wrong. A lot of the companies who are still not using the office space, but they're working as normal, are still paying their rents. So it's not every company that's not paying their rents, but there are some, like the restaurant industry, pubs, and some of the smaller offices, rather than the larger PLC type corporations that can work at home. They're the ones that are suffering at the moment. And if we now look at office space, so if we project forward, what's going to happen to London as far as, not just London, any major city where you've got lots and lots of office space? Me as an employer, I'm an entrepreneur. I used to employ people before as well. Okay, so if I have a choice of my people working from home, me reducing the office, because I can save a lot of money and my profits will go up as well. So if I can do that and my staff are happier working from home, that'll be great. So there'll be a reduction in requirements of office spaces in central London. This can present an opportunity as well where we can convert some of those office spaces into residential. But we have to be mindful of what is going on at the moment. So, and I am not the only one thinking along these lines. Alan Sugar, exactly the same thinking.
The banks are really annoying. I mean, they're telling people don't come back to work to January. And you know why? Because they're all giving them computers, taking them home, and they're all working from home, and they're all doing the same amount of business as they are doing. And they're starting to realise, hold on a minute, what do I need 50,000 square feet of offices for in the centre of London? It's actually we're paying away money for no reason at all. And they're starting to use the pandemic as an excuse for making mass redundancies.
And I've been speaking to a lot of my big friends as well who've got huge portfolios in central London. We're all the same. At the moment, what we're doing is we're hunkering down. We're trying to ride it out, okay? Because the larger you are, the more problems you could potentially have as well, right? So if you're new to property, it's great. It's a great time to start investigating. So I'm not completely negative about the property market. There are a lot of positives that will come out of this, right? One of the positives that will come out of this is now is the time to actually start looking at properties in different areas. One of the biggest things that have happened is the change in planning law, where you can add an additional story, but also change shops into residential units. So if you're looking at, this is where the opportunity arises, and I think a lot of people should be looking, where if you're looking at secondary markets, so secondary markets is not the main high street, but sub-high streets. So these sub-high streets have shops, retail shops, and obviously because of COVID-19, a lot of these retail shops have shut down. So mixed-use property is great because you can convert, you've already got flats on top, but you can potentially convert the shops into flats or into residential units. So that's where I think there's going to be a huge opportunity at the moment in commercial buildings, or partly commercial buildings that had shops at the on the ground floor or offices, and they've got a bit of residential, and also looking at certain aspects. Now, when it was announced that you could put a second story, a lot of the commercial buildings, people were buying freeholds in the auction, and they were going for far more than they were anticipated, only because people knew that they were able to put an extra story on top. So these are the advantages that we are going to be having. Now is the time to actually start looking. It's not to put your head in the sand. Even though I am, consolidating, I'm still looking for opportunities. That's not to say that I'm not going to take on opportunities should they arise, right? But now is the case of learning your area, feeling the heartbeat of that area, feeling what a property should go for in that area, so that when you are presented with an opportunity, you know that it's a good opportunity. So start looking at areas that you're interested in. Start monitoring what the house prices are. Obviously, at the moment, they're a little bit distorted because of the increase in property prices because of the stamp duty. Right, so these are the factors that you should be looking out for. I think we're going to attach a Lord Sugar interview as well, so he can give you a quick update as well, which is exactly what I've been saying all along as well. But hope to see you next week. I hope you found it useful. Please don't forget to subscribe to our channel, and please, above all, share this video with other people that you think will find it useful. Okay, take care, enjoy the weekend, and I'll see you next week. Take care. Bye.